And welcome. This is Mary Ellen McGonagle with your MEM Edge show, brought to you each and every Friday afternoon. This is the show where we put you in front of where the action is in the broader markets, and as always, with an eye toward helping prepare you for the upcoming week and also updating you on some of the activities that took place last week. A lot going on as usual, so let's get started. As usual, we will go ahead and take a look at the broader markets. We want to see what that backdrop is. Is it safe to get back into the markets just yet? And then also we're going to take a look at areas that are setting up as leadership. There are some clear-cut areas that are bubbling up within these broader markets that are definitely worth noting. And in addition, we're going to take a look at turnaround candidates that you can keep on your radar. These are stocks that peaked either in August or September, really fell out of bed, but are beginning to show signs of stabilizing and then eventually reversing their downtrends. Also, we're going to take a look at analyst upgrades and downgrades. They definitely had a particularly strong impact on specific stocks this week. So I'm going to share with you how you can. This is going to be for investors or traders that are a little more active and nimble, if you will. And I'm going to share with you some intraday charts. So if you are looking at the markets pre-open, get a look at some of these upgrades and how you can potentially take advantage of the moves in those stocks. Also, we're going to take a quick look at the performance of the S&P 500 in October and going into that 2016 election, just as simply precedent. One other area I did not share here is there are stocks that have broken out as well as very close to breaking out. So I did want to share about 6 names with you in relevance to those breakouts, and it will make more sense as we move on. So we did get some important headline news this week. That it did start out rather dismal in the sense that COVID cases escalated, particularly in Europe. The UK talking about a lockdown, and of course that would bring a halt to any kind of economic recovery and reopening within the US. So that definitely dampened the market's mood in the beginning of the week. However, we did get news late yesterday that that second stimulus bill is finally on the table, and there's anticipation of an October 2nd vote on that. So that's coming up, and that's certainly good news for the markets. Mixed a bit as far as data. Unemployment figures did come in a tad higher than expected, but the good news is that the markets were able to look the other way. Investor sentiment is really powerful as far as providing market direction. So the ability to kind of look the other way despite numbers that were a little bit higher is good news. Durable goods orders came out today. They did rise for the fourth straight month. So that is certainly good news as far as an economic recovery. And we did already touch upon those weekly jobless claims. So let's go ahead and get started. We want to see where the markets are. Where are we standing? We certainly had a very impressive day today. This is the daily chart of the S&P 500 index. Nice 1.6% rally. Nice rally into the close, but let's take a bigger look, zoom out. And what I do want to share with you is the fact that the S&P 500 does still remain below this 50-day simple moving average. This is the line in the sand from my work. A break below that is quite negative, and ideally for the markets to reverse this current downtrend, it will need to break back up above at least that 50-day. And at this point, we are still, this green line is your 10-day simple moving average. That's your first area of upside resistance. And that 10 days residing at 3322. We can get this nice metric over here, and that is relative to the close at 3298. So we're just at that period here now, but we can also see that the RSI and stochastics, these are both momentum indicators. They are both negative, stochastics below that 50, and then RSI also below that 50. So we are going to need to see a break above the neutral into bullish territory for that area as well. But as you'll see, there are pockets of strength and areas that are exhibiting superior outperformance relative to this broader S&P that you're going to want to be aware of, because these are potentially your new leadership areas once the markets turn. Let's go ahead and take a quick look at some of the underlying sectors within the S&P 500. These are the 11 sectors as well as the S&P, and this is a 2-month daily price chart, thumbnail price chart for each of these sectors. And I've gone ahead and added this RSI, that relative strength indicator. I'm putting it by descending order so that we can really up here get a sense of where the current strength is in the broader markets. And I'm seeing some really nice movement going into the close for this week that we have not seen in a while. But let's just take a quick look here. Utilities are certainly defensive, but they did see a nice uptick here. I'm going to share with you a couple of stocks within utilities that could be compelling for those of you that are looking to potentially buffer your portfolio. These stocks do offer a yield, and we're not quite out of the woods yet with the broader markets. Industrials slipped below that 50-day. Let's just take a very quick look here. This is due to the beginning of the week with thoughts that COVID cases are increasing, business reopenings were declining, so the recovery trade, if you will, the move into these cyclical stocks did in fact falter, but regained that 50-day simple moving average at the end of the week. So nice to see cyclicals potentially back on track. We certainly still have a little bit more work to do. But these two areas here, technology and discretionary, to have these areas back up in the forefront is really quite encouraging. For those of you that watch the show each and every week, you'll know that XLK, XLY, tech and discretionary were up at the forefront during that extensive period. Let's go back to this S&P. This nice, beautiful uptrending period was very much being led by discretionary as well as technology, and also XLC, which is communication services, but that is still languishing a bit. And I will tell you, it has everything to do with Facebook. There's vibrancy among communication services outside of that, but when you have also Google, these are two heavyweights among, in fact, they account for over 40% of this sector, and both of those stocks struggled this week. So let's go ahead and take this a step further, as we like to do, but would be remiss in not pointing out the big decline within financials, down 4.3%. Not action that you want to see if you're on the prowl for an economic recovery. Ideally, coming out of that 08-09 bear, financials, when they finally did get their footing, it was quite bullish for the broader markets. But we'll get into where that weakness is. So moving right along, let's go ahead and drill down as we usually do. We want to get even more refined, seeing where the strength was this week in the market. So again, that RSI, actually, I'm not sure if I said 1 month. This is a 2-month daily price chart. So what I've gone ahead here and done is drilled down even further. So I'm using ETFs to take us further into technology, with IGV being a top software ETF, IBB being certainly biotech within healthcare, semiconductors within technology, and so forth. These are ideal gauges to get a feel for where strength or weakness is even further below within those sectors. So let's take a look. Transports, again, those of you that follow this show, you'll know it has been up here in the forefront. And a lot of that has to do with rail stocks. They're really continuing to hold in quite remarkably well. And you like to see that. That implies an expanding economy, goods that need to be transported. Also, FedEx and UPS, big winners in here as consumers and other areas continue to need to have goods delivered. But this is really compelling to me. IGV, that is one of the larger growth names, I'm sorry, ETFs that is providing us insight into the software space. So take a look. Software really had this explosive move into the beginning of September. So it is pulling back, digesting in a base building period here. But underlying, this is one of the areas that is exhibiting outperformance. Let's go ahead and I'll pull up a weekly chart very quickly here. You'll see that software stocks were up 3.5% for the week. That's relative to the S&P that was down 0.6%. NASDAQ was up 1.1, but certainly we can see a big relative outperformance. A lot of that with cloud computing. From my work, this is actually quite exciting because a move back into these high quality, fundamentally sound cloud computing software stocks is very bullish. Biotech stocks, a bit bouncy and bumpy, but a nice 2% move in biotechs today. We can just take a quick look at this chart because it did have this downtrend reversal that took place last week, however, gave up a lot of that. This is definitely called a risk on trade. A lot of these biotech stocks do not have earnings. So when in the beginning of this week, there were recovery doubts and other fear factors, we did see a pullback, but a nice regaining today. If we have time, I have a couple of names within there that you definitely within biotech will want to be aware of. And semiconductors moving back up into the forefront, not as strong for the week as software, but let's go ahead and again take a quick look because this had a charge into new highs beginning of September. We can take a quick look at the weekly, and it's kind of just languishing here around that 50-day. I will say with my MEM Edge report, 3 of the 4 semis on my suggested holdings list were up quite a bit more than this group, the semiconductor group overall. We were able to identify the real leadership names within semiconductors. The fundamentals are really quite sound. So let's go ahead and move on just a bit further. We're going to take a quick look here at the NASDAQ. Very similar to the S&P, however, it is a bit closer as far as being above that shorter term 10-day simple moving average, but it does remain below that 50-day simple moving average. And just quickly, I want to share with you this one ETF that will shine a light on just why financial stocks were down so much. This is KRE, the regional banking ETF, and it fell over 7%. It was down over 8% at one point for the week. It was able to regain a bit of that, but bank stocks are suffering. Fed came out, they're due to keep interest rates close to 0% until 2023, and that is not a good backdrop for these financial stocks. So I'm going to take a very quick break here. When we get back, we're going to take a look at some of these turnarounds, upgrades, downgrades, and lots more. We'll be right back. During every bull market, there are a select set of stocks that far outpace their peers. They trade much higher and much faster than the rest of the markets. The reason? These select stocks have a set of characteristics that history has proven are common among big winning stocks. My easy-to-follow course will teach you the skills of a lifetime so you can learn how to uncover and then successfully trade these fast-moving stocks. Take my 5-part course now by going to meminvestmentresearch.com for this limited time offer. And we are back I'm going to begin by sharing with you another view. I did show you that candle glance 2-month view of these sectors, but this can be also quite helpful as well within StockCharts.com. You can go ahead and request this sector from the initial page. And what I've done is sorted it by performance for the week. And really what I did want to underscore was that concept that there are areas of the market that are bubbling up to the forefront. They are outperforming. The S&P was down for the week. Take a look, tech up over 2%. But more importantly, not all areas are participating, certainly not this week. So that is worth noting. A real true uptrend, a true bull market, will have participation that is much broader based than what we're seeing here. So I did want to go ahead and point that out very quickly as well. Let's go ahead and take a peek. I certainly don't want to put anyone off, but I am going to share with you a daily price chart of the September into November period for the S&P 500, and a little bit of similarity, certainly a lot of volatility that we're experiencing here currently. However, going into that election, this is just something to keep in mind. We did pull all the way back to this blue 200-day simple moving average. I do remember it rather clearly. And I do remember the contention. It was Hillary Clinton, of course, against, I don't want to say against, but vying for the presidency with Trump. And it really felt a lot more charged. This year, it feels very uh, kind of, the point here is I don't have a sense that we are going to see this much of a significant decline going into the election, but it does bear noting that the uncertainty, certainly the weeks leading up, we can maybe anticipate a bit more in the way of volatility. So let's go ahead and maybe more of a pullback. Let's go ahead and take a look. I talked about upgrades and downgrades, and what I did want to share with you is I should have done this sooner, and I apologize, but there are a couple of ways that you can get upgrades and downgrades. MarketWatch is one service, briefing.com is another. But what I wanted to point out to you here is that it does provide it to you on a daily basis. You can ask for it by category. Oftentimes these will come up pre-market, but ideally you want the upgrades to be shown initially, and then it is by date. So if you want to, that's one of many ways. So let's go ahead and take a look. We can take a look at CHDN, and I'll share with you because that was an upgrade that did occur today. And we can see on the daily chart, it was up 14%. This is Churchill Downs, and it was upgraded as mentioned. So certainly if you had captured that, I'm going to share with you an intra-day 15-minute price chart just to give you a feel, again, for more active traders that are more nimble, how you can potentially capture the big moves in some of these stocks when they do get upgraded. So this is today at the open. Take a look at this gap up. So on a 15-minute chart, what you will want to do is take a look at the peak in price on the open. You can see it did get up as high as 159 before pulling back. But what you want to do with that level is when the stock price on that 15-minute raises above that 159 level, that would take us to this third 15-minute bar, just as it goes above it. In fact, some of you may want to drill down even a little bit further. This particular stock was particularly active. You can use a 5-minute chart, and then the stock languished. This happens an awful lot. I can recall doing a trading room live from about 10:30 till noon, and it just appears it's that midday resting period, but it did have another leg up beyond that. So that was one of the upgrades I wanted to share with you. I do have several, but it again is with an eye toward informing you ways that you can capitalize on these big moves. NCLH, Baird did come out and raise their guidance for pretty much most of the cruise stocks. We're back down to a 5-minute price chart. In fact, I do prefer 15. It kind of smooths out a little bit of this diciness that you see. And NCHL did have this gap up here at the open. It gapped up about 8%, pulled back. So your entry point would be right here at that 16 level when it comes back up to that prior high. And we can see that the stock did advance quite a bit beyond that. You also want to have that RSI and MACD in positive territory. One other stock before we depart from this theme is Bed Bath and Beyond. It actually had a couple of upgrades beginning earlier in the week. So this same principle applies. This is a 15-minute. When the price breaks above it, you can take advantage of a continued move. Today it was not quite as defined. It did get an upgrade again, but you can see by using this intraday as well as the RSI and MACD, that is a potential way, because a lot of these upgrades are really being paid close attention to. There's a lot of cross currents within the markets, and there are those that are looking to Wall Street for more guidance. And some of the other stocks I will be sharing with you will also be moving because of these upgrades. I do look to them because they are a lot of the upgrades are for very sound reasons. These analysts are meeting with management, they are liking what they're hearing, uh, there are other reasons certainly as well. So let's take a look. I talked about the concept of turnaround stocks, and what I'm going to be focusing on today are leadership names. And what do I mean by that? Well, these are stocks that hit new highs going into either August or September, and these new highs were driven by growth prospects. This is ISRG, Intuitive Surgical, and we can see in line with the broader markets. In fact, it has a very similar look to the S&P 500, but here again with this potential candidate, you are going to want to see a break back above these simple moving averages with a positive RSI and MACD. Another name that we can take a quick look at, this is website developer and uh, GoDaddy, GDDY, a little bit smaller in market cap, so maybe a little more volatile, but more to the point is it did peak in price in early September because of growth prospects. The company did announce a merger or a purchase of a company that's going to really help them expand a bit more here. The company's stock was upgraded, their 2021 upgraded earnings estimates. But again, we are going to want to see a break above the simple moving averages, but we're getting there. This RSI poised to break up above that 50, and that MACD, we want to see that black line up through the red, indicating that the momentum has trended now upward and reverse the downtrend. Another potential turnaround that we can take a quick look at, and the ways that you can screen, a lot of these were coming up because of upgrades. So this is Intuit. Again, I need to see that break to new highs in that early September period, indicating leadership. And the leadership is coming in the form of potential growth prospects and fundamentally sound earnings and sales. So again, this Intuit is a bit more advanced. It has broken above that 50-day, but it's done so in the past as well. So you are going to want to see confirmation within through the RSI and the MACD turning positive. I'm just going to share, I have a lot of examples, of course, given the market dynamics, but eBay is another one. Now, this stock is not as compelling to me because it did have this failed base breakout. It was not at a new high, but certainly worth noting because it is potentially reversing that downtrend. We have gotten that black line up through the red in addition to the RSI close to breaking above. And this was an upgrade on the 24th this week. Analysts have a $65 price target for the stock. Let's take a look at some other areas here, because I did talk to you about stocks that are actually breaking out or close to breaking out, and many of them are going to be news driven. So first up here, we are going to take a look at Oracle. Those of you that follow the markets closely will know that they have been selected as a potential co-purchaser of TikTok, the Chinese video streaming company. It's certainly not a done deal, but it was big news that helped the stock pop. So we did have this base breakout. This was a 3-month base breakout, big volume characteristics. So just a name to keep on your radar. It will potentially bounce around here until news is confirmed. Let's take a look at a stock that is on our watch list with the MEM Edge report, and it is a software stock. We actually kept a number of software stocks, and they're actually doing quite well, certainly this week. But this is BAND, and this is a stock that did experience a base breakout this week. And take a look, an RSI that is positive, and a black line up through the red MACD that is positive. So very constructive. The company did come out with news on Tuesday that they partnered with Google Cloud, and the stock does have a price target well above where it is now, but one to certainly keep on your radar when the markets turn bullish, anticipating good things there. Another name on our potential list, if you will, SCPL. The company really just almost broke out. We would need to see a price break up above that 17, but it is acting really remarkably well, certainly outpacing the broader markets. And the reason I'm focusing on that is historically, those stocks that are able to withstand and outperform during periods of a correction or certainly distribution, these stocks will often go on to much greater heights once the market pressures are lifted. One other last name that we can take a look at here, just as a certainly indication, something that you can screen for. Let me go ahead and mark this one up. This is PRPL, newer to that mattress space, but they have really seen sales explode here. I'm going to share with you a view that is, let me just see if I can do this again very quickly, and it is a cup with handle. This is something from my years at O'Neill. It's a very powerful pattern when we have this cup up here and then this handle formation. So a break above that 25 would be quite bullish for PRPL. So as we go ahead and drill down, I did promise that I would share with you a couple of names in the utility. Again, this is going to be for those of you that are looking to expand or potentially look for stocks that could buffer against potential volatility. This is the utility, and so it is sorted by this StockCharts technical rating. So water stocks have held in well. From here, you're going to want to sort it again by that technical rating. And let's take a look. AWK, I talked about this yesterday in my Chartwise Women show as a potential candidate. It is today has reversed this downtrend, a 1.5% yielder. I'm going to leave it at that. For those of you who have not already, take a look. I have a special offer linked below to trial my MEM Edge report. In that report, I will not only tell you precisely when it's safe to get back in the markets, I'm also going to point you toward those leadership names that are going to potentially have great advances. Everyone have a great weekend, and I will look for you next Friday.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.